Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, as well as our co-host, Socialsuite, we're very pleased you joined us for our keynote presentation titled ESG for Metals and Mining, How to Get Started Fast. And before I introduce our speaker, please note that you can submit your questions for the presenter in the question box to the left of the slides, and that all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome our keynote speaker. He's Seth Foreman, president of Socialsuite, which is a member of the OTC Markets Premium Provider Directory. Welcome, Seth.
Great. Thanks, John. Appreciate the introduction and really excited to be here today. So let's jump in. ESG, it's one of the fastest growing criteria of investment in the world, utilized by both investors and issuers, backed by trillions and trillions of dollars with some of the biggest companies in the world. Thus far, the benefits of ESG have mainly been captured by large caps and large institutional investors due to its complexity, high costs, and other reasons. But that is all shifting as ESG starts to penetrate the rest of the market. Today, we're going to zoom out a bit. I'm going to take you through a bit of background on where ESG originated from, the growth and opportunities of ESG, including benefits and misconceptions. And then we're going to zoom in. I'll talk a bit about Socialsuite and who we are and how we are positioning ourselves in the market specifically for microcap companies, small cap public companies as they take their first steps with ESG reporting. So I'm going to go through a bit of the state of the market and really making that case for change as it relates to ESG. So the first part of this is where did ESG come from and a bit of history around it. But ESG has been around for a while. It started as what's called CSR, corporate responsibility, and it's really been evolving over time into ESG, or environmental social governance. A lot of this has come out of what's named as societal concerns, and this includes things like climate change, climate risk, social issues related to prejudice, diversity, and inequality. And all these factors have really driven this concept of ESG into the mainframe. But what really drove ESG, particularly from a financial point of view and an investor point of view, was driven from BlackRock, one of the largest, or the largest institutional investor in the world, and particularly from their CEO and chairman, Larry Fink. And the way that a lot of institutional investors have looked at ESG and the way that it can help them with evaluating companies is the notion of, let's not just look at companies from a financial point of view related to balance sheets, income statements, and other disclosed information, but let's see if we can evaluate companies more holistically. Things like from environmental risk, social risk, governance risks collectively, so that you can more holistically and more broadly evaluate a company. And a lot of this ultimately has driven the booming state of ESG investments. Today, and there's a lot of research into this, ESG investments continues to grow significantly. Today, it's in the range that I've read between 20 to 30 trillion dollars of assets today, in which asset managers are evaluating ESG as a risk factor, and that's going to continue to grow. In the chart in front of you, this could grow up to anywhere in the next 5 to 10 years, upwards of 100, 150 trillion dollars. So it's tremendous amounts of dollars that investors are pouring into the market and evaluating companies based on these different ESG factors. And the state of ESG continues to boom. There's been acquisitions, Blackstone acquiring a company called Sphera, many other public companies acquiring ESG analytic and data companies. You have the big four accounting firms, all of which have invested into full teams, helping companies, supporting companies as it relates to their ESG positioning and ESG data. And again, you have many different types of investors that have continued to put money into ESG and look at ESG in terms of an evaluating factor. Now, there's a lot of different reasons why and the benefits of ESG as it relates to an issuer and also for investors. But the main reasons, at least from the aspect of how SocialSuite has looked at it, is that ESG can drive new capital, helps with brand loyalty, and it can also help with top talent. For investors in particular, we have data showing that retail investors, particularly younger retail investors, 82% of them are showing interest in investing in companies that are socially and environmentally responsible. So a significant share. And investors, both institutional investors that believe and truly consider ESG factors and retail investors collectively are evaluating companies in this way. And if you're an issuer, it's the idea where, hey, this can help you raise capital because if investors are looking for companies with ESG information and ESG data, if you don't have any ESG information or reporting, then simply put, you can miss out on these different capital opportunities and you'll just get bypassed. And we see that quite a lot in the market. Consumers, 75% of millennial consumers will spend more with brands that have an ESG position. So consumers deeply care about ESG and sustainability. And the last area is employees. There's a lot of research showing how employees view sustainability and are very much leaning into this. They're 3 times more likely to stay at a company and 1.5 times more engaged at what they consider purpose-driven organizations. So if you're a company, whether you're an issuer, whether you're an investment company, asset company, your employees deeply care about this, particularly the younger employees. So having ESG and sustainability reporting will ultimately help you both recruit and retain employees. Now, an area, given that ESG is fairly nascent in general, still going through a lot of its an evolving state. We're in a period right now where, of course, there's also different controversies as it relates to ESG that are in the market. There's a lot of cleanup that needs to happen just due to the fact that there aren't clear standards and definitions related to it. That's why you're seeing more regulators getting involved. You're seeing a lot of different events and ESG itself evolve itself. And because of that, there happen to be a number of misconceptions in the market as it relates to ESG. And we see that a lot at SocialSuite. So I'm going to go through a couple of them that we want to highlight. One of them is that we hear this a lot. ESG is only for sustainable businesses and industries. And that's simply not true. We have customers that range the gamut anywhere from oil and gas companies, mining companies, metals companies, mineral companies, all the way to software, really running the range of types of industries that lean into ESG. And a lot of that is about telling that ESG story. A lot of these companies are doing really good things. We work with many mining companies that are doing amazing things in their local communities. And so being able to tell that story via ESG reporting so that you can talk about that to the market is really important, and you get the investors to lean into that. So it's really for everyone. Another one here, it takes time, and and ESG perfection must be attained before reporting. The ESG perfection is not, it's just such a evolving state, and it's a journey. That getting to perfection is very hard because it's such an evolving state. So really, what we say is, look, if you haven't done anything related to ESG, you need to get started. And it's really about taking those first steps, starting with working with companies like Socialsuite that can take you by the hand, take look at your data and be able to first do that initial reporting, baseline reporting, and then evolve and continue to report and progress and measure your ESG information. And that's an important point because it is quite a journey. It takes time. Another one here, ESG does not align with our core priorities. Again, it's really about ESG and the storytelling aspects of ESG and be able to show that, if you're doing certain things in impacting communities, in doing positive impact as it relates to the industries that you work on, you want to talk about that. And that's part of those priorities. And finally, my investors don't care. Investors do care. As I showed earlier, there's a lot of data showing over 80% of retail investors care about this. We have data showing that 9 out of 10 institutional investors are using ESG information as it relates to how they assess companies and assess risk of companies. So investors do care. And there's a lot of value to be had out of ESG, particularly for an issuer. One is around accessing capital. Many companies use ESG reporting as a part of the way in which they're raising capital, because it's that stories that they want to tell. It's ways in which investors will lean into that, as I discussed earlier. Compliance and risk management. There's a lot of regulatory change going on in markets around the world, from the US, Canada, Australia. All of them have regulatory changes happening that are mainly in proposal stage. And it's important to be prepared because in the future, there's likely to be more regulatory regulations as it relates to ESG and climate disclosure. So it's important to take those first steps towards ESG reporting. Um, Investor relations, again, telling that story, being able to build trust and share that holistic story about all the good things, both disclosures and non-disclosed information through ESG reporting. Profitability and growth. We have a lot of data points and research showing that companies that are investing in ESG are also companies that are more committed and are companies that are more profitable and are focused on growth. Reputation and branding. So this is really about reputation management because in many ways ESG and ESG reporting is about it shows from an investor point of view, it's companies that are more reputable, that care about their brand and are more long-term committed. And of course, finally, with the right software, you can show those measurable achievements. You're able to track progress over time to show that you're improving your ESG reporting quarter over quarter over quarter, which is something that many investors look to see. So if ESG is so important and there's so many benefits of it, why aren't all companies reporting on ESG? And one of the problems with this is that probably the biggest is that it's highly complex. There's 10, probably at this stage over 20 different frameworks out in market, and it's difficult to choose which one or should you be reporting on each one, and that creates confusion. It can be a very time-consuming process. It can be minimum 6 to 12 months in some cases, and it can be prohibitively expensive, in the hundreds of thousands of dollars. And because of this, mainly at the full ESG reporting process, a lot of this has been completed at the large cap, mid cap level, whereas a lot of the small caps and micro caps haven't taken that initial steps into ESG. And so that's where Socialsuite has come along. And what we've done is we've developed a solution that's simple and helps companies centralize their information so that they can disclose that impact and really show that value to their investors. They're able to show the right types of data. We built it so that's easy to use, which is something that through our research we heard time and time again from our different customers, particularly at the microcap and small cap level. And then we offer ESG coaching and a full expert network of different coaches and advisors that can help our customers through this process. And so, as such, SocialSuite's grown over the years. We now have over 200 organizations that use our products, companies that are on the NASDAQ exchange, ASX. Uh, as mentioned earlier, we're a preferred provider on the OTC Markets Group, and we also have our customers on the New York Stock Exchange. So it really runs the gamut. And we have customers that range on that are mining companies, oil and gas companies, software companies, biotech companies across the board that are all leaning into ESG as a way to help them in all the different value aspects that I mentioned earlier. A couple case studies and that I want to talk about as how some of our customers have seen success. One of the great stories that we like to highlight is from Latin Resources, an ASX listed company. Prior to working with us, they didn't have any ESG reporting, but they had a goal to raise additional capital. So they came to us, we worked with them, and we were able to, within 6 weeks, be able to produce a baseline report off of the World Economic Forum framework using our software. And just weeks after that, after publishing their baseline report, they were able to raise $15 million in incremental capital off of an ESG fund out of Canada. This is money that they would not have received if they didn't have an ESG report. And so it's an example where if you're capital raising money, telling that ESG story and being able to show that impact that you're having is really important, particularly if you're trying to raise money from organizations such as an ESG fund. Another example is a software company called optimizerx. optimizerx, again, had not done any ESG reporting. They wanted to take that first step, and they chose SocialSuite. We helped them design and develop their reporting in just a few weeks with a baseline report. And for optimizerx, they were looking to improve their ESG scores. So there's a number of ESG scoring companies that will assess issuers based on certain ESG data. Some of them use different web crawlers, some of them use researchers, but using our software, we were able to help optimizerx improve their scores upwards of 30% on an ISS ESG score. And again, a very happy customer after working with us. And the last one is a crypto company, Finance Australia. They were looking to improve their reputation just because crypto in general has some negative perceptions relates to the energy usage. So they wanted to show all the good things that they were doing and the sustainable actions that they were taking as a company. And so they came to SocialSuite. We helped them produce a report, and they were also, in addition to improving their reputation, also able to secure additional funding. So to recap today, why is ESG important for both investors and issuers? For investors, ESG is important because you're able to look at issuers more holistically. You don't have to only assess them based on a financial disclosed information, but you're also able to look at them more holistically across what they're doing for the environment, what they're doing from a social standpoint, and their governance standpoint within a simple to read report. So it's really that holistic action. It shows ultimately the companies that are doing this, they have more long-term horizons. So that means that they're more committed companies. It shows that they are more sustainable companies. And there's a lot of research that shows from a social aspect, companies that are more diverse have better performance and are better performing teams. And so that's for all those reasons, from an investor's point of view, looking at companies that have ESG reporting, there's a lot of benefits attached to that. For issuers, why is ESG important? Well, ultimately, it helps you enhance your profile. It helps you tell your story, all the good things that you're doing as it relates to environment and social aspects. It helps you raise capital, as I gave some examples earlier, like Latin Resources that raised $15 million of incremental money. It helps with your reputation. And if you have employees, it's going to help you recruit, retain, and engage your employees. So ESG is complex. There's a lot of areas and a lot of reasons why companies haven't jumped in just yet, but Socialsuite's here, and we've designed a platform specifically for small cap companies and micro cap companies to take that first jump into ESG. So I encourage you to join the close to 200 companies that we've gotten on board at Socialsuite. We want to work with you and help you on this journey. My contact information is here. So feel free to email me, or of course you can happy to set up a meeting after the call so that we can tell you more about Socialsuite. Thank you very much. All right, so we are at 21 minutes, so we have a few minutes to jump into some Q&A here. So let's see what kind of questions have come in. So the first question, for a microcap company that is not considered ESG reporting, how should we get started? So I think that the first thing to do as it relates to getting started is doing an initial assessment of where you are today. What information do you have? Do you have a purpose statement? Do you have any emissions data? Are you doing any good things in your local communities? Do you have a diverse team? All these things, that initial assessment is important, because then you can start to collect that data, and ultimately it will help you move faster once you choose a ESG provider. And so I think that's that first step in that process. And then, of course, it's evaluating different companies. There's, of course, ESG consultants that are out there. There's ESG software that is out there, and evaluating different providers to help you determine what is the best choice in terms of disclosing your and jumping into ESG. The next question is, let's see. There are many ESG frameworks. Which should we choose for ESG reporting? That's right. There are a lot of frameworks. There's GRI, there's SASB, there's the UN Sustainability Goals, there's World Economic Forum, stakeholder capitalism. There's industry-specific frameworks. So which to choose? Generally, this is a decision that depends on what your goals are. At Socialsuite, we did a full evaluation of all the frameworks, and ultimately what we decided on is in terms of the best framework for companies just starting out into ESG reporting is the World Economic Forum Stakeholder Capitalism Framework. The reason for that is that we looked at it as one, it includes 6 of the frameworks. It includes GRI and aspects of GRI. It includes aspects of SASB. It includes aspects of the UN Sustainability Goals, along with other industry specific. It also has one of the factors is TCFD, which is for climate disclosures, which is where generally what we see is that globally ESG is moving in the direction of more TCFD reporting, which is already part of the World Economic Forum framework. So we believe, and it's also the simplest. There's 21 factors, all set within people, planet, prosperity, governance, and and because of that, all those reasons, we think that's the best place to start. That framework's the best place to start. All right, how should a retail investor assess a company with ESG reporting? I think a key thing is, as a retail investor, and it's going back to some of the things I talked about earlier, companies that actually have jumped in and have either an ESG report, they may have a web page about ESG, maybe they've done a full disclosure report. these are companies that have taken that step. They're more long-term committed. They're trying to share all the good things that they're doing as it relates to environment and as it relates to social aspects. So in general, as a retail investor, I think that means it's a company that is more committed, more trustworthy, and are looking at things on a more long-term horizon. And because of that, perhaps it's a company that you should consider more highly over companies that haven't done any ESG reporting. All right, next question. What are some of the actions a mining company can take up to enhance their ESG credentials? I think there's a lot of things that a mining company do, or frankly, any vertical can do. I think part of it is what we hear from a lot of the mining customers that we have is really talking about a lot of things they do in their local communities, being able to tell those stories and being able to both it's information that the local communities will want to hear about because of of the impact that those companies are having, and it's also great information that other stakeholders will want to hear about. And so providing that in a ESG report or as part of your ESG reporting can enhance those credentials. Do investors look for a certain format in ESG reporting? So I think that it's a good question. I think there's a basic level to this, and then there's more advanced levels. At a basic level, formats wise, I think that it's important to, when you're just starting out, to have information on the website in general. If it's a more sophisticated investor, they're going to be looking at it more from a framework and a few different types of frameworks. So ensuring that you have a template version of the information, that it's being reported on in the right way, so that if an investor that's using, or an ESG scoring company that's using web crawlers, ensuring that the right wording is actually being captured by the web crawlers is very important. And then so it's easily readable by human researchers that some of them will use. Other investors, so that it's easily accessible on the website through a PDF report or on a web page. I think that's just really important. And it's easily findable on your website, so that you can show it and share it. Is there any mandated ESG reporting by SEC or Canadian regulators? So as it relates to ESG at the moment, and I'm not a lawyer, but generally right now ESG is in a proposal stage as it relates to US, Canada, and Australia. So there's a lot of discussion around it, and real very very high potential that in the near future, potentially there will be passing of certain aspects of ESG reporting. I think particular on the climate disclosure side. So, and then also the SEC is also looking at ways in which they can have better definitions and standards to help the fund managers and investors in terms of how they classify and market their different ESG funds. So that's all in the works right now in terms of proposal stages. Socialsuite's looking at this very closely because it's an evolving topic that will continue through the year. All right, last question. ESG can help with public image and raising capital. How do you measure the cost to a company of implementing ESG? So how do you measure the cost? I think that, look, in one way, from a return on investment standpoint, an example going back to the Latin Resources example, they raised $15 million from an effort that an investment effort that they had. And, at SocialSuite, we have different tiers of our pricing. So as it relates to at the microcap level, we designed this to be highly cost effective for microcaps under certain market caps at the microcap level. As such, we did that because, we want to be able to provide a product that helps microcaps take that first step. So the ROI for a Latin Resources example was through the roof because they would not have raised that money without the ESG report. So in general, I think it's about, it depends on goals, what you're trying to achieve, and ultimately trying to find a provider that's going to help you take those first steps into ESG reporting and being able to ultimately measure that progress and help you create value across and share that value depending on what your goals are as it relates to ESG reporting. And so that's something that I'm happy to, whoever, the person who asked this question, happy to dig into this more offline. All right, so that ends our questions. Thank you very much for your time today.